we are here to discuss the Bandhan Bank's performance for the third quarter ending December 2018. Along with that, we will also take the opportunity to discuss and take questions for the recent merger announcement with the Group Finance Limited of Bandhan Bank. To discuss the same in detail, I've got with me our founder, Managing Director and CEO, Mr. Chandrasekhar Ghosh, our CFO, Mr. Sunil Samdani, and myself, Hiren Shah, who is the Head of Investor Relations. Now I would like to request our MD and CEO, Mr. Chandrasekhar Ghosh, to brief you about the recent developments in the company. Over to you, sir.
Thank you, Hiren. Happy New Year to all of you. Thank you to giving the valuable time to listen us. And we know that you already been informed about it. We are acquired the Go Finance. And in that point, I like to first share to all of you. The beginning, if you see the history of Bandhan as a microfinance NBFC, then form the bank. So when we bank begin on that time we have been strategically decided will be like to future grow business in bank in a two manner. One is in organic, another is in inorganic both. And also we are decided which segment we work. We are decided as the three vertical. Our core business will be the microfinance. We will be like to MSME, and we also like to work in a affordable housing. So three vertical we like to grow the bank in future. On that basis, microcredit after the 3 years, it is very good way are growing and established on that way on that. And then we are also set up in a small affordable housing team in our bank. And we are last 2 years are doing it in a small way and thinking and learning on that. We are trying on that. We appropriately we can be like to take one of the affordable housing company on the basis of that platform if we can be grow in future of the bank. So we got that opportunities, and the Group of Finance have been, we are see that their culture values is very much good way matching with us, and their of course their portfolio quality is also aligned with us, and they are working in a west and south and some of the central. We are in a east and central also in south. So it is matching on that. The geographical concentration will be like to balance. Their full loan is a secured and long term. Our microfinance loan, it is in short term and unsecured. That will also balance the book for us. So on that basis, we saw that there is a good opportunities for us, so that we have been taken in this. And finally, I say that because of the geographically different, and we are going to each other geography, and both the business will be like to grow. So for that reason, we are getting very good comfort on that, and both are very good governance, good brand, and people known and set up on that. I feel that it is the business opportunities for us for future in the same segment of the customer, and it is very good for us, so that we have been taken on that. Next, I am coming on that the Q3 result, and informally, you know that we have the one one of the big infrastructure account, which was in a 384.95 crores. The balance it is we are declared it in today. That is in we'll like to 100% provision on that. And after that 100% provision, our third quarter profit has come 331 crores, which is the 10% year-on-year growth. If we not count this provision, our business growth will be 93%. Sorry, profit growth is 93%. And net interest income, 1,124 crores, which was in the third quarter of the last year, 732 crores, which is 53.5% growth has come. Non-interest income, 234 crores, which is 48% year-on-year growth. So coming to this advance, we have now 35,599 crores, which is year on year we grow 46%, aligned with the last history on that. Deposit growth, deposit has come now 34,639 crores, which is 37% year on year growth. Out of that deposit, 85% is a retail deposit, which we focused more on that, how retail deposit we can be like to take, because it is very stable and not fluctuate more on that. And our CASA has come now 14,342 crores, which is CASA percentage 41.4%. It has been grown year on year 70.72%. So CASA growth has also come very good. So it will be helped us to grow more in the other business on that. And our NIM has come 10.5%. Cost to income ratio, we try to maintain on that. That is coming that 33.7%. Gross NPA, 1.3%. If we not count that one account, if we count that account, that will be the 2.4%. And this is in quarter-on-quarter basis is the similar other than this one account. Net NPA, it has been remained the same, 0.7%. And last quarter also it was a 0.7%. And because of that, we saw that there is a microcredit portfolio, there is an 87% microcredit portfolio and 13% is in non-microcredit portfolio. Whatever the microcredit portfolio, that is we count it is an OTR, on-time repayment rate, which date are due of the customer and which time, and that time, that day they have given, that amount will treat it as a due and collection, that is called the OTR. That OTR we are now saw that in this quarter 99.04%. That means earlier it was in a 98.86%. That means their very good improvement has come to this, the microcredit portfolio, which helped us to arrest the NPA. So that NPA, net NPA is remain same in the last quarter and this quarter. Our capital adequacy ratio 32.8%, Tier 1 31.7%. ROA, if we see that the ROA now has come this quarter 2.9%, but if we count it as a 9 months ROA, this is in 3.9%. If we not counting the one account, then it will be ROA will come in the 5.6%. So in that sense, ROA is effect, but profit is the same line. ROE same in the 12.5%, but if we not count this one account, then it will be 21.2%. So business all figures more or less we are targeted by what we are expected or budgeted. We are on the same line. Some of the figures are exceed of that target. So microcredit advance 87% and non-microcredit 13%. And microcredit customers deposit 6.8% of the total deposit. It is in the same earlier also was there. And you know that our PSL is a 96%. Branch we have been grown. As of now, we have that 978 branches. And last year in the same quarter, 887, which is the 10.26% year on year have been grown. We have been DSC Doorstep Service Center as of now 3014. Last year, this moment 2633. That means this year, that means the 1 year, we have been increased the 381 Doorstep Service Center, which helped us to give the more credit business in here. Employee, we have that 31,115, which is also 13% growth. And customer, we have now 1.51 crore. That means the 33 lakhs customer added year on year basis. But last quarter, we added 9.22 lakhs customers, last quarter only. So I saw that there is a good help for us, the business. And the last quarter, we are, that means quarter 3, we are disbursing the 13,000 crores to 21.86 lakhs account. So all together, we are feel that a very good business has come, and we are always in the last quarter it is better than other 3 quarters. Always it is a trend. We saw that. We hope that this quarter also will become very good, and thank you for all of you on that. You have some question we will like to give.
Thank you very much for the insightful presentation, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Oswal from Nirmal Bang. Please go ahead.
Thank you for the opportunity, sir. First question on the infrastructure account which we have recognized as an NPA. So on that account, sir, how much interest reversal during the quarter?
The interest reversals in this quarter was a very small amount of about 3 crores because at the beginning of the quarter we stopped accruing the interest and accordingly provided.
Okay. The second question on few states announced this loan waiver, agriculture loan waiver. So does that affect the customer behavior of the microfinance customer? And secondly, how do you see the portfolio quality in the election year given these kind of pressure coming in different states?
I mentioned on that we have not seen any change what we saw earlier, sometimes some states the declaration. I feel that the 2 matters we find out on that. One matter on that is this loan really is not eligible by our customer because this is a farm loan, they are not farm borrower. And second is there our customer that is in loan criteria is there who have the defaulter in March 2018 and they are not in there. So in that sense they are not in that point, but some people always like to educate them not to pay. Sometimes happen on that. But this time we saw that this is not that much in the impact is coming to the field. One cause maybe earlier also they have been talked, but they have not get benefit. Now people are resistance grown in themselves and future feel that it is not for us. I hope that is in one side. And election year, sometimes it will be disturbed in some delays on that, but not in a politically we have not seen anywhere they are imposing something which have been done in the last year. But as of now, we have not seen. I feel that this time is a little bit different on this.
Okay. And sir, are we recognize NPA on daily basis or monthly basis?
No, NPA is in calculate on the basis of monthly, which is they are. It is you can be divided on that 2 things on that. One thing is there is a microcredit which a portfolio we are holding that a good amount. We are practicing on that. One installment is not coming today, my risk. In that way, we are addressing OTR and automatically we saw that automatically the quality of the portfolio increased. And whatever you are saying that NPA, it is a regulatory point of view. So when the balance sheet prepared, they are system given that figure and they are showing on that. So we are not that NPA figure, we are counting it to drive for collection the money. We are collection the money, drive from the one installment not given, go there.
Understood, sir. And last small data point, can you give us the movement of NPA during the quarter? Thank you.
Okay. We'll get back on.
Okay, sir. Thank you.
Thank you. The next question is from the line of Amit Premchandani from UTI Mutual Fund. Please go ahead.
Good evening, sir, and thanks for the opportunity. I just had a question on slide 30. If you can elaborate, who are the beneficial owners of Financial Inclusion Trust, Northeast Financial Inclusion Trust, and Bandhan Employee Welfare Trust, and Caladium, who owns the Bandhan Financial Services?
See, the two trusts, Financial Inclusion Trust and Northeast Financial Inclusion Trust, are the public charitable trusts. So the general public of India are the beneficiaries. Bandhan Employee Welfare Trust is there are about 3,000 employees of Bandhan who are the beneficiaries of it, which does not include the top management of Bandhan. Then there is Caladium, which is the GIC arm, Government of Singapore, and then there is IFC, GIC, and SIDBI. Sorry, IFC and SIDBI.
So, if there is any dividend which is being paid and it is moving up to, say, Financial Inclusion Trust, so that amount is basically distributed through various activities, CSR activities, or how is that money used?
So these two trusts runs a lot of developmental activities in the field of education, healthcare, and poverty alleviation. They run about 3,000 schools. There are about 1 million families which gets benefited every year on the healthcare programs. Then there is a targeting hardcore poor, where about 20,000 beggars gets uplifted every year from poverty to a small entrepreneurship. So these are the activities these trusts run from these funds.
And when you said they are the owner of the trust, how exactly legally they are the owners? I'm just trying to understand.
The beneficiaries of these trusts are the general public of India. The trustees are the independent, eminent personalities who are not related to the bank or their senior management or founders. So they are independent personalities who run these charitable trusts. Like we have an ex-chairman of NABARD who is on one of the trustees, and the ex-High Court judge of Tripura is one of the trustees. So these are the trustees who run the trust.
And sir, what are the plans for the rest 20% dilution which is required as per the RBI requirement?
We are working on this. It's always work in progress for such issues. We'll continue our discussion with RBI and let's see what comes up.
Can we rule out another M&A to dilute?
There is nothing on the cards today.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Adarsh Parasrampuria from Nomura. Please go ahead.
Sir, thank you for taking my question. One question was on your acquisition of or your merger with Gru. It has like 650 employees, and you are probably merging it and also at a relatively high valuation for the systems, processes, and all that they bring in. So, what are the ways in which you make sure that people stay when the merger is there after 2-3 years? There is no poaching either by HDFC Group or possibly they leave, right? So I think people have made that business. So how do you ensure that that team will stick for the next 3 to 5 years?
Well, the team on both the sides are excited, and all of these things, obviously, when you do the documentation, these are taken care of. We are very clear that, we want to do this business with the existing team, and they are also equally excited. So we don't see a challenge on this side.
And the second question is more in terms of your growth, right? So when the YOY numbers look great. Obviously, it comes on back of good growth you do in fourth quarter, which you did also in FY18. But when I try and look at the trends, generally there seems to be a slowdown if I try and look at the sequential trends versus what you had. Specifically, looking at the portfolio, which is the non-MFI portfolio. So, what's happening? Are there some products which you try to do which you're scaling back, or what's the outlook there?
So, see, on the non-MFI piece, there was this one big loan last year, right, which is obviously not there anymore. So that also gives us an impact. And it's all about building the expertise, right? We are not gunning for a number. We believe that unless we have built the required skill sets, growth will automatically come. So while we have been showing a consistent growth, we don't see this as a challenge. We hope to continue this number in the future as well.
But other point I'll add on that, if you see that the microcredit portfolio growth coming from the third quarter and then fourth quarter, this is normal nature in the historically. So that when the first quarter and second quarter is not that much growth has come, that time have been non-microcredit portfolio showing a normal nature in their growth. So when the third quarter their growth little bit has come up, so then automatically this is the portfolio because of the small base. So they cannot be compete on that one. If you go to this the March, the last quarter figures in the last year, and you can be see that how it has come on that. So in that sense, otherwise the growth is non-microcredit is not the degrowth. Growth is the same steady way it's coming, but problem is there because microcredit growth is little bit higher, so that in the percentage it is showing the little bit low.
No, so the only point is, when I look at the MFI book, obviously, it's unsecured. You have in the last, after becoming a bank, a lot of the growth has also been driven by ticket size, disbursement ticket size. So I'm just trying to understand where does the 13% number, which is the non-MFI share of your book, really go in the next, say, 2 to 3 years' time? Is there any outlook there? Will that grow to 20%, north of that, or...
No, other point, if you see that the first year when you open the bank, that time we have not expected it a non-microcredit portfolio, we can be grow. No, we have not started in that time as the good people and team. Only point is there because we feel that the people asking me, where you will get the deposit? So if I not get the deposit, how can I go on that? So there is a lot of concern in that time. But when I say that, no, deposit growth is stabilized, it is coming, then I have been started to build up the team and more people, and accordingly we are going on that. So this is the one side I say that the not coming to the non-microcredit portfolio in that much growth.
Sir, and the last question from my side is, you did indicate that your deposit from MFI customer is like 6% of your deposit. That's only the SA number, or that's the total SA plus term deposit number?
It is 90% is SA.
Okay, the MFI deposit from MFIs is 90% SA.
What's happened is there, we are principally from beginning decided on that. This is the credit. This is focus only the credit, not the deposit. And the bank branch is in deposit, not that much credit. Because if I give the focus target of the deposit, and these people will be like to change their mind and my credit quality will be come down. So they are focused on the credit, not the deposit. Whatever the habit they have, weekly given the 10 rupees, 20 rupees or 50 rupees above of their installment, that will become as a balance of the deposit. So that reason it is there, no target we have given. Otherwise, sometimes they will be disbursed the loan and put it the account and not given the chance to withdraw, then deposit will come high. So we are very careful about that point. So that we are happy this is the 7% or 8% of the total deposit. Even 10% will come maximum.
Understood. Perfect, sir. This is helpful. Thanks a lot. Yeah.
Thank you.
Thank you. The next question is from the line of Nishan Shah from Macquarie. Please go ahead.
Hi, sir. First of all, just a question on average ticket sizes. So we've seen roughly about an 18% increase in at least the AUM per customer. What would be our incremental ticket sizes, and could you give some geographic split, your core markets, what kind of ticket sizes would it be, and the new markets, how much could it be?
The which ticket size you are talking about?
No, so if I just say divide the microfinance portfolio by the number of active microfinance customers, that's seen roughly about an 18% kind of growth year on year versus a 44% growth in the AUM. So 18% is ticket size growth, the remaining can be the new customer additions.
Yeah, so that's in line with our strategy, right?
Correct.
Nick said that on an average, with 8% GDP and 5% inflation, so about 15% ticket size growth for good customers with good track records, which in our case is 99% plus, is something which is palatable. And on the other side, the customer side, our customer growth year on year has been 23%, which we typically look at. That's a combination of both of these.
Correct. No, could you like just quantify a little bit on the incremental disbursement ticket sizes or something?
It will be depend on other side also. If you see that the new customer adding 18%, no. So in that sense, this new customer average loan size will come to the 25,000. And when the old customer will come who has already been 80,000 rupees loan, so if he asking 20,000, we are giving on that. We have the restriction on the 20,000 rupees. Our customer can increase even 30,000 maximum, 10,000 to 30,000. So they are coming to the 10 to 15,000 incremental of that. But it is depend on which cycle of the customer and what types of business he is doing, and that business are permit to this cash flow or not.
Fair enough. Did I hear that correctly? Like the new geography customers, the first cycle customers, you lend up to 25,000 rupees?
Not up to average 25, not average. More than 30,000.
Not more than 30,000.
Sorry, 35,000.
35, okay. Right, and a question on the merger. Fair enough, we appreciate that Grow is an excellent franchise and everything else, but then such an expensive acquisition, was this really the only way to go? Could we not have done something else or waited for something to come at a more reasonable price? 13 times forward price to book, it's a little difficult to digest.
No, if you see that the business always we are looking the future. What will be the possibility in future on that? If I see that today is a growth or last 3 years growth of the business, and what I am looking in the future, I have need that platform, that resource persons, and their branch, their IT, and their process of that. And it is you can be like to see in that way sometimes also investment on that. If I like to anyone starting to the new business, and he will be like to start first to the investment. So you look at that, the future isn't huge. And what is the growth I cannot quantify because I am restricted. But I know that because I have been built up to this institution as a Bandhan. I saw that what is the growth in my eye. And that I also relooked the Google. And I feel that this is not only the price, this is an opportunities of the future growth.
Fair. Just one last question. We remain open to further acquisitions, or is this enough for a couple of years to just integrate this business and maybe after a couple of years relook at mergers?
There's nothing on the table as of now.
Okay, fair enough. Thank you.
Thank you.
Thank you.
The next question is from the line of Kunal Shah from Edelweiss. Please go ahead.
Yeah, congratulations, sir. Great set of business momentum. Firstly, in terms of the entire merger, so whatever would be the statutory requirement, be it in terms of CRR, SLR, and even in terms of the PSL portfolio which Guru would need it, obviously it would fulfill from its own book as well. But how do we see it? Would we be building out over here in terms of, or we will wait for the merger and everything will get through only on the day? So are we preparing ourselves in terms of balance sheet, investing more into the treasury incrementally? How would that be?
I give your last one of the question and then Sunil also participate. You see that when I opened the bank, before that, I also sold my portfolio to the bank. And at that time, I see that what will happen after I become a bank. And that time, one of the bankers talked with me. That time, he was a bank chairman. He said that, Mr. Gore, when you are become a bank, and your portfolio will be treated as a bank portfolio, and you will be eligible to sell it as a IBPC, and your earning will come double. And I said, what do you say that, sir? Yes. So as a NBFC, you cannot do it, but you are not getting that price. And I saw that how much I've been earned from my portfolio sale when I bank. But the same portfolio, when I was in NBFC, I have not sold. So when the Gruho will become as a bank, their portfolio is 75% in the private sector. There is an opportunity that I have not need that much of the private sector lending. I can be sell out more and earning will come more. The business different way is there. I am not like to in details everything on that.
So Kunal, coming to your point, our cost of funds, if you look at our numbers this quarter, is on the interest-bearing liabilities is 6.3%. Right? This, even if you add the CRR, SLR, another 40-50 bits, there is a cost advantage for us when we do the merger. And we don't see raising deposits as a challenge to refinance the group's current liabilities. So that is not the challenge for us.
Okay. And in terms of building up of the CRR and SLR, it will be done only post the merger?
I mean, even today, if you look at my treasury assets, it's almost 30% of my total deposits as against required 23%.
Okay.
So we don't see that as a challenge.
And secondly, in terms of, again, touching upon this question on, say, the GRU's team. So given that maybe the CEO of GRU, once he comes, say, on board at Bandhan, so what is the kind of profile which he'll be running, and maybe in terms of the expansion as well? So since they'll be moving out largely of, say, the western and the central region and getting towards the east, would it be entirely GRU team which will be managing it, or maybe we'll try to more and more as we see the incremental requirement of the branches and people, that will happen more from the Bandhan's current management?
As far as the affordable housing goes, the GRU is the expert, right? They are the one who built this business and have successfully run them over the years. And it's time tested. They've gone through all the cycles and successfully come out. So they are the ones who will drive it. We will provide the resource and the distribution and customer base that we have. Right? So all that support will be given by us. But we are very confident, right? Our initial interactions with the team, we feel that they are excited to get such large platform. Today their branch network is about 198. Against that, we offer them close to 780 branches and 3,000 DSEs.
Yeah.
Is enough opportunity, and that too in complementary geographies with similar segment of customers. So the synergies and the opportunities is immense. It's up to us how do we exploit the best.
Okay. And would there be any non-compete agreement with HDFC Group as such in terms of they getting into the similar geographies or similar customer segment for a particular period post this entire merger?
No, that there is no such non-compete because they are in this line of business, so there can't be a non-compete there.
Okay, so there will be no non-compete with any of the entities.
Geographies in which we work, I don't think HDFC have that large presence.
Okay. Okay. And even in the existing base, wherein GRU is already there, okay, so there also there will be no non-compete. Not only about the eastern region, but when we look at the western and central, wherein GRU is strong, would there be any non-compete between HDFC and, say, the merged entity?
No, I don't think there can be any non-compete because both of them are in a similar line of business. Our focus is more on, semi-urban and rural areas, which is our strength. Where we don't see a challenge from any other competition, including HDFC. So we are not worried about that, yeah.
Okay, yeah, thanks a lot.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Parag Jariwala from White Oak Capital. Please go ahead.
Yeah, thank you. So, if you look at GRU, basically, all of us feel that, they are very, very conservative lender, and which can be demonstrated if you look at the last 3-year growth for all housing and finance company versus GRU. So basically, my question is, are you going to give a very free hand to the management which is coming on the board in terms of growth, the margin, or the kind of customer they want to look at to? As well as my one more question is there any agreement with the group or understanding by which you want, the top management team to be there for, a certain couple of years?
I mean, we don't have this line of business, right? So there is no overlap. So they are the one who have to run this business. So that both the parties are very clear that they are the one who have to run this. We don't see that as a challenge.
Okay, and in terms of any understanding by which you want to retain top management team in terms of ESOPs and etc.?
We talked everything on that, and they are very much comfort and excited. I made all the senior level and talk separately. That have been process done. Without that comfort, we cannot go. So that I got the comfort, then I start.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Rakhi Prasad from Alder Capital. Please go ahead.
Good evening. I had a question regarding your micro borrowers. So this quarter, I think there are 8.67 million micro borrowers. Out of those many number of borrowers, how many actually have a savings account with Bandhan Bank?
100%.
All of them would have a savings
All of them.
And what would be their minimum balance?
No minimum balance.
No, and their average?
See, these customers, on an average, the total deposits from micro customers is about 1,700 crores. About 1,900 crores.
And divided by this number, so it will come into the 1,500 or 600.
So, Raki, if you really look into it, we have approximately 1 crore 20 lakh micro banking customers, which has liability accounts with us. Out of which 84.8 lakh customers are having the credit business and credit relationship with us. So we have much more liability accounts with us than only the borrowing customers.
Correct. And this has always been the case. I mean, 100% of your borrowers have had...
Yes, it is always the case.
Okay, all right. Thank you.
Thank you.
Thank you. Next question is from the line of Abhijit Sakhare from Goldman Sachs. Please go ahead.
A couple of questions on the microfinance business.
Abhijit, you're not audible.
Hello? Is this better?
Yes.
Hello. Sir, you talked about improvement in collections, but specifically if you could give us how the 30-plus delinquencies have moved, which states have done better, any states where you've seen delinquencies get worse?
Yes, we are giving on that. It is in, again, I have been mentioned on that, it is totally regulatory, but my control, we are trying on that, how much my customer are paying on time. That is 99. So 1% always is the behind, and that is every month some given that NPA. So we'll give the figure on that. How much?
Sir, and have you seen improvement across the board?
Across the board.
Okay.
What happened is there, the earlier people who are the borrower, it will be take some time to come because it's a discipline issue. When once upon a time discipline break, so it will take some time to recover it and come to the system. So this is the learning on that.
And sir, what would be the average ticket size, let's say in home markets such as West Bengal, Bihar, Assam, and how does that compare with the rest of the country?
We are not in that much of the home, but we have started little bit on that. That is in average loan size is in 8 lakhs on that.
No, so this is with regards to the microfinance business.
Oh, microfinance business is a depend on how senior of this the customer and how long they are with us and they continue their loan. But average loan on disbursement we have that total country 58,788 on disbursement.
Got it.
And outstanding 36,115.
Okay. And so the Part 30 number that you gave last quarter was 1.97%.
So that is today about 1.82.
1.82. Okay. All right. Thank you.
Thank you. The next question is from the line of Bharat Kumar from JP Morgan.
So this is Saurabh. Sir, as regarding the stake dilution, after this, do you plan to ask RBI for any timeline extension for bringing the stake down to 40%?
I feel that now is the time we are going to ask the RBI approval of this, and indirectly it will be they know that we are in the process, and whatever they will be, of course, they will be is a totally regulatory point of view. So we cannot be go to that the extension on that.
Okay, fair enough. And secondly, sir, on this on the GRU merger, is there any overlap between, let's say, a GRU's customer? I mean, their home loan size is 9.5 lakh. Our ATP is far lower at 35,000, but different asset classes. But is there any overlap you see between your customers and what GRU's customer profile will be?
We have a very small number of customer in their segment, so that we have not any that much feeling that our customer overlapping with them.
We are talking about the home loans, but if you look at even the GRU bucket-wise portfolio, 30% of their housing loan is up to 5 lakh rupees. Right?
Okay.
So these are the segments which are our microfinance customers.
Okay. And typically, what will be the annual income of a microfinance guy, sir? I mean, just trying to, at the top end of your, customers.
Very tough question, because the checking the customer's income proof is tough to that segment. I can give session, but it is not.
Fair. No worries, sir. All right, sir. Thank you very much.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Parmeshwaran S. from JM Financial. Please go ahead.
Yeah, hi, this is Samir.
Samir.
Yeah, just quickly, if you look at slide 17 on disbursements.
Yes.
Yeah, so there's a chart on total disbursement, non-micro banking asset. It shows 135 billion. Just wanted to reconfirm that figure.
135 million, no?
So just wanted to understand what is it depicting.
Yeah, it is not billion. It is 13.57 billion. And
okay. That is the disbursement for the quarter.
Yeah.
But then if I consider it as 13.5 billion and try to match it with non-micro disbursements on the chart on the left, how does one tie that?
We'll checking on that and that.
Okay.
We'll check.
That's all from my side. Thanks and congrats on a great set of numbers.
Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Sir, this quarter, this NBFC crisis have opportunity for the bank to raise any assets for the bank?
See, for us, at least in microfinance, we don't see opportunity as a challenge, right? Anyway, there is a large unbanked, underbanked population which is available, irrespective of crisis or not. For us, growth is a factor of our own skill sets that we build internally, right? If we are able to build our people, if we are able to build that culture, values among our staff to go and deliver these loans, the growth will automatically come. So for us, that is not that big an issue that because the competition is not lending will give us more opportunity, no.
Thank you. The next question is from the line of Hiten Jain from Invesco. Please go ahead.
Yeah, hi. I have one question. So could there be any risk from regulator perspective on this merger?
As of now, no. We explore everything, not.
So we've been advised by our lawyers, so we don't see that as an challenge.
Okay, so you expect that even Guru Finance could act, I mean, the branches of Guru could be converted into bank branches, and we could also, like, those branches could also work like bank branches?
Yeah, that is up to us whether we want to treat them or not. So that option is to us.
Okay, so that, I mean, you don't see any hurdle in that?
No.
Okay. All right, thanks.
Thank you. The next question is from the line of Raj Mohan, an individual investor. Please go ahead.
Yeah, thanks for taking my call and congratulations on a good set of numbers. There has been a staggering growth in CASA deposits. With a busy fourth quarter, when the bulk of the business for the year happens, do you think the momentum in the CASA would continue to fund a substantial part of your incremental business? And where do you see CASA stabilizing for your kind of business in the medium term? Also, 2 data points. So what are the savings deposit rates and the percentage of deposits over 1 lakh?
If you see that at the beginning, I am facing this same question. Who will give the deposit? How will get the CASA? But when I achieve, then again coming on that, what will be the future? I feel that where Bandhan is strategically driven, that driving have been helped us to give this type of deposit. If you see that not only the CASA, if you see that the retail deposit 84%, the very few banks have the 84% retail deposit. Is not about this quarter. Is continuously coming on that. Last quarter it was 82%, now it's come to the 84%. So I say that we will be not demoralize our team, they cannot be achieved. I feel that they can be achieved on that. That is not the big challenge. Because one point, if you see that our rural presence is very good compared to any private bank. And we are, whatever we are taking the deposit from the public, and this is the rate point of view, less than 1 lakh is in 4%, and more than incremental 1 lakh above, it is in 6%. So that is, many of the private bank also, it has given in the same way. So I feel that it is not very much big challenge for us to collect that deposit.
And as far as what percentage of saving bank deposits is above 1 lakh, currently it's about 68%.
Okay, and the average savings deposit rate, current savings deposit rate?
Will be about 5.2%.
Okay. Next, in how much percentage of your non-East and Northeast regions, which currently constitute about 30-35% of your business, would you think that you have crossed over the initial settling phase and just ahead of a J curve for growth in especially the MFI business?
We couldn't get that question. Could you please repeat?
Yeah, what I actually meant was in your non-East and Northeast businesses, in how much part of the business would you think you would have crossed over the initial settling phase and just ahead of a J curve for growth in especially the MFI business?
See, as far as East and Northeast goes, that's our core area. That's our strength. And in geographies outside East, there is still a long way to go in terms of market size and market share. So, despite having a dominant market share in East and Northeast, we still feel that we can double our book in about 4 to 5 years' time.
And do you feel that you have crossed over the initial settling phase in your non-East and non-Northeast regions?
Yes, I mean, we have been, the first time we went outside East India was in 2010. So, it's about 10 years that, we've been in the outside East India. It's just that because of our portfolio dominance, it's so high in East India, people tend to say that we are an East-focused bank. But even outside East India, our book is almost 30% of the total book, which is close to the next MFI in the country.
Understand. Now coming to Guru, it has traditionally been growing at around 20%, and we have discussed a lot in this call itself. With the expanse of your reach and capabilities, catering to a wider market, and your more aggressive execution track record, do you internally think there exists a strong possibility of growing that part of the affordable housing part of the business much faster than the 20%?
That is obviously there, because currently they have a restriction in terms of distribution capabilities they have, the customer base they have. From a 198 branch, they will have a platform which will have 3,000 DSCs and 978 branches. The liability profile, which is much more advantageous than an HFC. So we have every reason to believe that the growth has to be faster.
Okay. One final question. Post the approval received recently from RBI, when would you next need to go to RBI from your current base of about 978 branches and 3,014 DSCs? How much is the potential to increase your captive customer base from the 15 million customers you currently have?
If you see that our branch 978, so this is a good number. If you see that the last 3 years, whatever all private bank opened the branch, every 4 branch opened by them, 1 branch opened by Bandhan Bank. So it is a good way on that. It's the other way. If you see that the last 1 year we have been open more than 10% branches. And I also mentioned 381 doorstep service centers. That is also we have been opened in this year. So I hope that the branch growth is already in there. We have not in a say that no. And we ask the 40, they have given the 40.
So that depends on the business requirements. As and when we feel that we need more branches, it's our stated strategy that we want an 18 to 20% customer growth year on year for our business.
So based on your current base of around 4,000 centers, DSEs plus the branches, you feel you can extract a lot more business and increase this 15 million customer base much more significantly?
Yes. Every quarter we are getting that the 7 lakhs to 9 lakhs customers. Every quarter. So that is also helped us to get a new business.
Thank you so much, sir, and wish you all the best.
Thank you. The next question is from the line of Rahul Jain from Lion Rock Capital. Please go ahead.
Yes, hi. Thanks for taking my question. I just had one question. So when you decided to, look at these inorganic opportunities, was it primarily after the RBI restrictions came in, or it was always that the bank was looking at these opportunities and Group came in? And just to add on to that, the second question is that when did you really started to kind of, the discussions with Group or HDFC Group kind of started to happen? Has the deal been making, been in process for the last few months, or is it like something which was put together only recently? If you can share something on that. So that's all.
Yeah, to be honest, we first discussed Group, we first tossed up this idea to HDFC before we were listing, right? Because we were looking at this as an option to get listed, because we always liked this platform.
Okay.
That was the first time we discussed with them. Of course, it was not that, it didn't materialize then, but went through now.
Okay, and the second is, did you really start again looking up inorganic after RBI restriction came in, or you were anyways exploring these opportunities?
We were, see, let us be very clear. This acquisition is, the RBI regulation is not the prime motive, right? Our stated strategy for the bank was that we want to be in the underbanked and unbanked segment in the tier 3 and tier 4 cities, and in, offering services to a particular segment with 3 main identifiable products, which is microfinance, MSME, and affordable housing. So our strategy has been to expand in these 3 products from day one. So this was an acquisition which matched our entire strategy, and that was the prime motive for this. Yes, it also helped us bring the promoter shareholding down. But, if that was the motive, then we could have looked at any other company as well if that was the prime motive and not the strategic mix.
Okay. That's all from my side. Thank you.
Thank you. We will take the last question from the line of Rohan Mandora from Equirus Securities. Please go ahead.
Sir, thanks for the opportunity. So again, coming back to the Group Bandhan merger, so the way Group is currently operating in terms of, say, the sourcing mix and evaluation of proposals, that thing, do we intend to replicate it across branches, or like, because moving into East, sourcing through a DSA channel, so currently they are working in Gujarat or in the Western geography, they already have, the DSAs already have an understanding of how Group looks at those proposals. So probably, would that be what is our strategy in terms of replicating this in these two? What kind of a time frame are we expecting in terms of these branches, the current Bandhan branches being able to source loans as efficiently as Group is sourcing right now? So what is our expectation on the timelines? That was first. And second is, on the ILFS, actually we have made 100% provisioning. So are we not expecting any recoveries from that as of now? What is our assessment on the lodging defaults from that exposure?
Coming to the Gruho point on that, the first thing is there we like to not change any model in the beginning what they are driving on that, which we learn from microcredit. When we are the microcredit converted as a bank, at that time my customer says that, sir, if you change the model, I need to go to bank branch to deposit the installment, I'll not go. Please, you will continue this model. And I have not changed anything. And some little bit change, again, I have been returned back to the earlier model on that. So it is better on that. What is the model is established, it like to continue that model. If geography-wise a little bit change is there, then on the basis of that decision, that will be like to take, not in a major and core things. Other point I say that the eastern region Gruho already been in place and they are working. So not that big, but just have been started 2 years before on that, and some portfolios they are very small. So they already tested on that this model is working or anything change is required or not. So I hope that the first point is they will not like to much more change in the geography wise, then it will be destructive to the business. And if it is need some state to state some variation, that will be like to think about it, how it can be like to do it.
And coming to your next question on the ILFS side, on the prudent basis, on the conservative basis, we provided for 100%. That does not mean we don't expect any recovery from these accounts. Today, we don't have enough information about the company. So, on the lack of information, we provided for 100%.
Okay. I think just probably this number you had given in the call that for Group, around 30% of the customers are below 5 lakh. So, like 5 lakh 35. So, from our pool of MFI customers, if we were to say that what percentage of those customers would be easily mappable, or maybe easily where we can do a cross-sell in terms of home loans. So, any estimate on that?
No, that is something that the Group team is an expert. So, when they come on board, they will sit, analyze and do it.
Okay. Yes, sir. Thanks a lot.
Thank you.
Thank you.
Thank you very much.
Thank you to all of you.
Thank you. Mr. Sunil Samdani, any closing comments from your end?
So, thank you. Thank you, ladies and gentlemen. Thank you for your time. Appreciate.